Yeah. Call me when you need it late at night. You know I'm sliding. I heard you been dreaming about me lately, girl.
So today the market went up quite a bit with a lot of the positions that I am in. I told a lot of people to buy into relatively easy to pick positions like Netflix when it was at 77, Oscar Health when it was under $13.50, Zeta basically under 17, which is like, we went down to $15 actually. I actually told someone he had like 50K to invest. I told him to put in majority of it. He ended up not doing it, and lo and behold, he didn't make as much money as he could have, which is fine. But one thing I'm starting to notice with investing is like, it is literally just the business of risk. The higher risk tolerance you have, the more money you're gonna make. In some cases also be down, right? So it can go both ways. But yeah, I have like a small account on Robinhood where I'm up like 5K, which honestly is not that much, but I think I only have like 100, I don't know, something thousand invested, if even. I don't even think if even that.
All right, so after we just had that talk, I guess I wanted to talk about a few things that I guess I learn every single time the market goes up and the market goes down, is that like you really just don't know, when the market's going to go up, when the market's going to go down. You can assume and have assumptions of where the business is going to be in 12 months, which is literally what you want to do with most companies is the business going to make more money? Simple as that. And you can look at all the intricacies, you can look at all the little details, but I think what it really comes down to is the business going to be really just making more money in the next 12 to 24 months? You have to look in the future. I think a huge factor of really buying into positions, and I feel like I find myself also kind of struggling with this, is that I feel like when stocks are at the price you want to buy them at, or when you say you want to buy them at, people generally don't buy them. And I think it's really just a survival mechanism. People don't want to lose money. And when companies are down and they say that, they wanted to buy it at, for example, let's say Oscar Health, like they wanted to buy Oscar Health at $13. Once it hit $13, the people that said they wanted to buy it at 13 weren't buying it. And so I think in a world of AI and a world of really just like people probably not having jobs in the future, I think the only thing that a human being can do that's going to be scarce is probably risk take, right? Take risks, because I don't think AI is going to be the one pulling the trigger. I mean, I'm sure there's computer trading and whatnot, but I think the biggest thing a human being can do is take risks, calculated risks, when you have strong conviction in a company, when you have strong conviction in what a position is going to do. Otherwise, you're just saying you want to do something and then you don't do it when it happens. And then once it goes up, you're kind of mad at yourself. And what that does is, I feel like I'm going to get a little bit more scientific with this, is what that does is it really just builds, neural pathways in your brain that basically says, I'm a bitch. That's really what it does. It's like, if you say you're going to do something, once it hits a certain price and you don't do it, and you have conviction and it's going to go up in the future, and then it ends up doing it and you didn't buy any, the only thing you're telling your brain, your subconscious, your wiring is, I'm not built for this. And what is it going to do next time there's a drawdown? Subconsciously, it's going to tell you, I'm not built for this, and you're not going to do anything. And so I think that's like honestly the biggest learning lesson of, I don't know, I guess like positions going up and positions going down is like, put your balls on the table, right? That's what I've heard from every single big trader, every single big investor, is they simply just put their money where their mouth is and they take risks. And I mean, it also just comes down to, there's a reason why there's only a certain amount of multimillionaires, or that was right next to my face. But there's a reason why there's only a certain amount of, I feel like multimillionaires, multi-billionaires, is because they're essentially doing things that nobody else wants to do, which is take risks. Nobody wants to do it. Nobody wants to put their balls on the table. Like, excuse my language, but nobody wants to do it. And that's why there's such a limited amount of people with huge amounts of resources, right? I really think there's a big reason why, there's such a wealth gap, because you could say, certain people were in certain positions where it obviously helped them. They know certain people, but at the end of the day, you still have to take risks. And if you think about all the biggest people in the industry, all of them have been down 50+% of their portfolio, and all of them are also billionaires. Now, a lot of people I'm sure have gotten wiped out, but at the end of the day, a lot of people are down, many times in their life. And when you're down, again, at the very end of the day, you have to say what you're going to do, and you have to take risks. Otherwise, you're just going to be like everyone else. So I think for 2026, honestly, really what I think I'm going to do is trim up a lot of my portfolio. I almost got dicked on like 5 different investments. I invested into USAR and I put $50K in it. I literally sold it. I made a profit on it, and then I got into it again, and then I sold it. And I think I lost maybe $1,500. But if I kept holding it, I would have been down 25,000, right? So there's positions and investments where if you just feel you need to get out, even if you're going to lose a little bit of it, generally I just get the fuck out and don't think twice. There's another one called Rich Tech Robotics, which I think I put in 25,000 at $5.17. For some reason in my brain, I was just like, I need to get out of this position. 10 seconds later, 10 seconds later, I lost $75. If I would not have sold that position, I would be down probably 12,500. It halved. So it went from $5.17 to I think $2.20. So I guess there's these lessons within investing that if you feel like you need to get out of something, you get out of something. I think that's the biggest factor of it. Not always, but I think sometimes you definitely should. Probably not just sticking to stuff just because, you stick into stuff. Oftentimes I feel like your gut will probably lead you in a right direction. Another example, let me give you guys another example because we're going on this example rant. I bought Novo Nordisk at $44. It went up to $58 and I sold everything. That stock is now $38, right? So I would have halved my money again if I didn't sell it. So lesson of the day, it's okay to sell positions. If you have a feeling to sell it, just sell it. You don't need to be stubborn and be I'm going to hold it. I'm going to keep holding it. Just sell it if you feel like you need to sell it. At the end of the day, you're going to make the most money with your intuition. You need to build your intuition with this kind of stuff. It's not just going to be, what people say on Twitter. It's not just going to be listening to what people have in a Discord. You need to build your own intuition. And so I think that's really my biggest lesson, right? For 2026, it's going to be trimming a lot of the positions that I feel like are not worth having, and then adding, a lot to positions that I feel like are worth having, and adding a lot. And if something doesn't feel right, that's okay. I can change my mind. I don't need to be stuck on one way of how it was. You can change your mind, right? So that's the biggest thing. I think the sectors that I'm probably going to go into for 2026, I'm in a lot of healthcare. I'm in a lot of Oscar, Novo, might get into UNH a bit. And then I think the companies that obviously dumb as hell to say, but have the most growth potential. Damn, some people are straight glaring. I thought people don't do that in New York. She even looked back. God damn. Okay, whatever. It's all good. But yeah, I think I'm just going to invest in the companies that I understand, that I've kind of built my intuition in. And I think over time, the more you invest, the more your intuition starts building into other categories of investments and other companies. But yeah, at the end of the day, it's just going to be companies that have high earnings and companies that I understand, their growth trajectory, and take bigger swings. I think that's the end of it. Just take bigger swings.